Investing in a Roth IRA is not just a smart financial move. It's a game-changing opportunity that many investors overlook. Imagine this. Every dollar you earn within a Roth IRA grows completely tax-free, meaning the government doesn't take a cut of your dividends, capital gains, or the funds you withdraw after age 59 and a half. It's a financial superpower that puts you ahead of the pack. Now let's consider this scenario. You start with just $100 today, and that investment has the potential to grow into $100,000 or even more over time. The best part? That growth stays tax-free forever. You could build a portfolio full of dividend-paying stocks that generate thousands of dollars every year, and none of it would be taxed. It's like having a cash-flowing machine working in the background of your life. And the best part? You can pass on that wealth to your children or even donate it to charity without the IRS taking a penny. I'm not just some random person talking about this. I'm a university professor and a wealth strategist. I've worked with over 500 clients in helping them secure their financial future, and trust me, those who take advantage of accounts like the Roth IRA are the ones who see the best returns over the long term. So today, I'm going to share 5 ETFs that you should consider buying and holding in your Roth IRA forever. These are the type of investments that will set you up for retirement with more peace of mind, more financial freedom, and less worry about taxes eating away at your profits. Before we jump into it, I'd love to hear your thoughts. Drop a comment below and let me know what ETFs you're currently holding or considering for your Roth IRA. I want to hear from all of you, especially the beginners out there, because the more we share, the smarter we all get. Alright, let's lay the groundwork. The Roth IRA is, without a doubt, one of the most powerful financial tools available to everyday investors. What makes it so great? The biggest benefit is the tax-free growth. Any money you make, whether it's from capital gains, dividends, or interest, isn't taxed while it sits inside your Roth IRA. And when you withdraw that money after you've hit age 59 and a half, you guessed it, it's still tax-free. This is huge when you think about the long-term impact. Let's put this in perspective. If you were to invest $500 a month into a Roth IRA and your money grows at an average of 8% per year, historically, the S&P 500 has averaged around 8 to 10% annually. By the time you hit 30 years of investing, you could have a $1.2 million portfolio. And guess what? That's $1.2 million without the IRS touching it. It's a tax-free haven that allows your wealth to grow at an accelerated pace. Many people don't realize just how big of a tax burden they carry in their regular investment accounts. Every time you sell a stock for a profit, or every time you receive a dividend, the IRS takes a chunk. The Roth IRA allows you to sidestep all of that. Now, let's talk about an option that's great for beginners or anyone who doesn't want to spend time managing their investments, the Target Date Fund. Target Date Funds are an easy way to set up your portfolio for retirement without much effort. If you're not interested in picking individual stocks or managing a complex portfolio, a Target Date Fund could be your best friend. Think of it like going to a one-stop shop for all your retirement needs. You don't need to be an expert in the market. Just pick a fund that aligns with your retirement age and you're good to go. For example, Fidelity's Freedom Funds offer a range of options based on your target retirement date. If you're planning to retire in 2055, you would invest in the Freedom Fund 2055, which is mostly made up of stocks early on to give you growth, but then gradually transitions into a safer mix of bonds as you approach retirement. I love Target Date Funds because they do all the work for you, and they're a great choice for hands-off investors. For many people, retirement is far away, and they don't want to worry about their portfolio every day. These funds will automatically adjust their asset allocation over time so you don't have to think about it. Plus, they tend to have very low fees, making them an affordable option for most. Let's move on to what I consider the foundation of any good retirement portfolio: exposure to the S&P 500. The S&P 500 is a basket of the 500 largest companies in the United States, and it's often considered a great proxy for the overall health of the U.S. economy. Over the long run, it has proven to be one of the most reliable and consistent performers in the world of investing. If you want to set yourself up for retirement without picking individual stocks, investing in an S&P 500 ETF is one of the best ways to go. It gives you broad exposure to the U.S. economy and has a long history of delivering strong returns over time. And when you buy an ETF that tracks the S&P 500, you're essentially buying a piece of the largest, most successful companies in the world. Some of these companies are the household names you know and trust: Apple, Microsoft, Amazon, and more. And here are a few great options for S&P 500 ETFs. Vanguard's VO, a popular option that comes with a low expense ratio and a history of strong performance. Fidelity's FXAI, another solid choice that's known for its tax efficiency. Schwab's SWPPX, a low-cost ETF with a track record of matching the S&P 500's returns. Now I want you to think about this. By investing in an S&P 500 ETF inside a Roth IRA, you can participate in the growth of these massive companies without paying any taxes on your dividends or capital gains. This is the kind of set-it-and-forget-it strategy that works incredibly well for long-term wealth building. One of the best parts of a Roth IRA is the ability to receive dividends and not have to worry about taxes. So if you want to build a consistent income stream from your investments, dividend-paying ETFs are an incredible option. Dividends are like the gift that keeps on giving. Imagine you have $1 million invested in a dividend ETF that yields 5%. That means you'd be receiving $50,000 per year in dividends tax-free. This can provide you with a reliable income source throughout retirement, and because it's in a Roth IRA, you won't owe a single penny in taxes on those payouts. Some of my favorite dividend ETFs include SCHD, the Schwab U.S. Dividend Equity ETF, which is known for its solid dividend yield and high-quality stocks. VEG, the Vanguard Dividend Appreciation ETF, focuses on companies that have consistently increased their dividends for years. DGRO, the iShares Core Dividend Growth ETF, is a great option if you're looking for dividend growth over time. In my experience, these dividend ETFs not only generate steady income but also allow you to reinvest those dividends back into your portfolio, creating a compounding effect that accelerates your wealth growth. Now, for those of you who are a little more risk-tolerant and are willing to take on some volatility for the potential of higher returns, I'd recommend looking into growth ETFs or even sector-specific ETFs. Growth ETFs like QQQ, Invesco QQQ Trust, give you exposure to technology stocks like Apple, Microsoft, and Tesla. These companies are known for their incredible growth potential, but they can also be volatile in the short term. If you're comfortable with a little risk and want the possibility of outsized returns, these growth-oriented ETFs are worth considering. However, keep in mind that you should balance these with safer, income-producing ETFs for diversification. Now that you know the ETFs you can invest in, let's walk through the process of setting up your Roth IRA. It's pretty simple. You'll want to open an account with a brokerage like Fidelity, Schwab, or Vanguard. Once you have your account open, you can start making contributions up to $6,500 per year, or $7,500 if you're 50 or older. You can then use those funds to invest in the ETFs we've discussed. Remember to focus on diversification, balancing between growth stocks, dividend stocks, and safer investments. All right, that's all I have for you today. The Roth IRA is an amazing tool, and when you pair it with the right ETFs, you can set yourself up for tax-free wealth growth. So now, I'd love to hear from you. What ETFs are you holding in your Roth IRA, or what are your favorite ones for long-term wealth building? Let me know in the comments below. If you found this video helpful, be sure to hit the like button and subscribe to stay updated with more wealth building strategies. Thanks for watching, and I'll see you in the next video.